Hi, this is James Shug with Westpac London's end of day report for Friday, May the 11th. Well, a modestly positive end to the trading session in Europe, probably for the flimsiest of reasons though. I'll run through the main news items of the day. Firstly on Greece, no government formed there yet. The outgoing Prime Minister Papademos went to see the President. No statement was issued after that meeting though, so nothing new to report there. Quite a bit of a comment from other European officials though about the possibility of Grexit or Greece exiting the euro, which now seems to be given quite a high probability by many observers. The German Finance Minister said that the risks of contagion for other countries of the Eurozone have been reduced if that were to happen. Although that sounds a little bit like Henry Paulson, who after Lehman Brothers collapsed said that it effectively what me worry. So it remains to be seen whether that confidence is misplaced or not. The European Banking Federation chief Clausen, he said to think that Greek exit would impact the European economy and banks in general, that will not happen. Also, the Riksbank boss, Janssen, said that European central bankers had discussed the possibility of Greece exiting and the fallout that might ensue. That's European central bankers with a small c and a small b. It doesn't necessarily mean that the ECB was part of that, although I'm sure they were. In terms of data, we had the European Commission release its latest forecasts. As in February of this year, they're still forecasting a recession in Europe, but only a growth contraction of 0.3% in 2012. That's unchanged from their February forecast, down from a growth of plus 0.5% in their previous forecast in November last year. At Westpac, just to remind you, we're on minus 1% this year, so we're looking for a deeper downturn. I mean, some of their national numbers are pretty scary. Although they've got Germany and France both growing slightly this year, Italy and Spain are both forecast to shrink between 1.5% and 2% this year. Portugal down 3.33%, and Greece is forecast to contract by about 5% this year. Greece and Spain don't grow next year either in their forecasts. In Canada, we had a 58,000 increase in employment in April, and that came on top of an 80-odd thousand increase in March. That's the biggest back-to-back job increase we've seen in Canada in I think 30 years or more. So a very healthy job story in Canada over the last couple of months, as we've seen in fact in the Australian data in March-April, in the March-April figures. Had the PPI in the US producer prices. It fell in April because of falling energy prices, which will probably be captured in the CPI figures next week. But this is actually the big one. This is what gave markets the boost in the London afternoon. US consumer sentiment was reported in the preliminary University of Michigan index to have risen just over 1 point to 77.8. Now that's the highest it's been in 4 years. The expectations component did slip slightly, but there was enough of a rise in the current conditions measure for the overall index to hit that 4-year high. Now you need to know that the preliminary Michigan index is the result of a survey of just 300 people. That's what, 1 in a million Americans. Previous highs in that survey have included early 2008, just before Bear Stearns went under, and when the recession in the US was just 6 months or less down the road. Prior to that, it was in early 2007, when the US mortgage market was already in meltdown, and the credit crunch that began in August 2007 was about 6 months away. So I would caution that high points in the University of Michigan Sentiment Index, a survey of 300 people, don't always necessarily presage pleasant events. Okay, so on that note, I'll run through markets for you today. The London market up 0.6%, the French market unchanged today, the German market gained almost 1% today, the Spaniards down 0.7% there. New rules related to the banking sector and the mortgage market in particular were introduced or announced by the Spanish government today. That weighed on the banking stocks there. and the Italian market up 0.3% today. The Dow at the moment up 0.3%, as I say, due to that consumer sentiment index generating a positive response. In terms of commodity markets, mostly negative, the ones that we look at. Copper's down 1.2%, gold's down 0.2% at $1,585 an ounce, and oil down 0.5% at $96.64 a barrel. The Aussie dollar dipped back to 1.002 against the US dollar again today, but it's at 1.006 at the moment. I'll leave it there. Have a good weekend, and I'll be back next week.